Hi, I'm Larry Shover, Chief Investment Officer of Solutions Funds Group. With the S&P 500 rallying more than 100% since March of '09 and the U.S. economy seemingly in recovery mode, it might be very tempting for you to let you or your client's portfolio just enjoy the ride. But thanks to globalization and increased technology, diversification attempts that have worked in the past aren't really working right now. I look at the Russell 1000 Growth Index compared to the Russell 1000 Value Index. Look at the year 2000, the decade ending 2000. The correlation of those two indexes was 57%. With the decade ending the year 2010, that correlation has climbed to 92%. A more extreme example would be the MSCI Emerging Markets Index compared to the Russell Growth 1000 Index. The decade year ending 2000, the correlation of those two indexes was negative 6%, and the year 2010, that has climbed to over 89% correlation. It's very risky right now. Diversification attempts that we've looked at in the past just don't seem to be working the way they have in the past. But it is really hard to take your portfolio or your client's portfolio, something that seems to be working so well, to take some money off the table and reallocate that to something that has proven over time to diversify. Let me talk about managed futures. Let's face it, the last year and a half, the performance has been very subpar. The fact is, asset classes in the last couple of years have all gone up together and all have gone down together. It's been really a struggle for CTAs. But if you look at history and use history as your guide, managed futures has provided the diversification necessary, especially in crisis. When you think of 1987, when you think of the Russian debacle, when you think of Asian contagion, 9/11, or the most recent credit crisis that we had in 2008, you'll see that CTAs have been negatively correlated to the markets. Now, I can't guarantee that's going to happen in the future, but if you want to look at history as your guide, managed futures, just the fact that the CTAs are grabbing risk premiums around the world, taking advantage of markets that are in stress, has proven to help diversify your portfolio. But again, don't take my word for it. Go to the CME Managed Futures Resource Center, look at some of the third-party independent research on managed futures and see if they are for you. There are many managed futures funds out there right now. Some of them are offering some very good benefits for diversification. I would just encourage you, just get some managed futures exposure. Join me next month as we just dig just a little deeper into managed futures space. I'm Larry Shover, Chief Investment Officer of Solutions Funds Group, reporting to you from the CME Group in Chicago.